Hello friends, I welcome you in my video. Today's topic is performance indicators of bank. This is part 4 video. In this video we are going to talk about burden, credit deposit ratio, CASA ratio, cost income ratio, etc. So let us start. First one is cost to income ratio. Okay, so what is that? The formula is operating expenses divided by operating income multiplied by 100. Okay, so it is used to compare the operating expenses of a bank vis-a-vis its income. Operating income includes interest income, fees and commission, brokerage charges, discounting charges, etc. And operating expenses includes expenses, employee cost, administrative expenses, depreciation, etc. Okay, so the lower the ratio, better the performance. It indicates more profitability of the bank. Okay, so since we are talking about cost to income ratio, here what we are doing, we are comparing the operating expenses with operating income. Okay, so definitely if my expenses is lower, then my performance is better. Next one is CASA ratio. So the formula is average current account and average saving account balances divided by average deposit. Okay, so average deposit we have already discussed in our earlier video. Okay, so the CASA is, the full form of the CASA is current account and saving account. Okay, is a low cost or no cost source of finance. Okay, so let us understand why it is no cost and low cost and no cost source of finance, because the saving account is a kind of very basic account, and bank offer only 3 to 4% rate of interest, and in case of current account there is no interest paid to the depositors. And further these deposits are in the form of perpetual, because once the account is open, the individual continues with this account for a certain period. Okay, because they establish their relationship with the bank. The CASA is non-term deposit, meaning it is used for everyday banking and saving needs of the customer. Okay, so because it is not a term deposit, it means it is payable on demand. Okay, banks always try to keep this ratio as much as maximum possible, because definitely if the ratio is higher, then definitely your cost of deposit will come down, because the CASA is a no cost or low cost means of finance. Higher the CASA, better the profitability. So as I have already mentioned that in case if the ratio is higher, it means the bank is able to manage the low cost finance for financing the loans. So if there is a cost is lesser or lower, then definitely the profitability will be better. The next ratio is credit deposit ratio. Okay, so the formula is total advances divided by customer deposits. Friends, please take into consideration, here we are deducting the interbank deposit, okay, from the total deposit. So what it does, it expresses the relationship between advances granted by banks and deposits of the bank. Okay, so this is the relationship between the credit extended by the bank against the deposit it has. Okay, so if the ratio is too high, it means that the banks might not have enough liquidity to cover any unforeseen fund requirement. If the ratio is too low, the banks may not be earning as much as they could be. Okay, higher ratio in comparison to industry average implies that the bank is able to deploy its deposit in effective manner. Okay, if the ratio is lower than 1, it means the bank relied on its own deposit to make the loans to the customer without any outside borrowing. If the ratio is higher than 1 or greater than 1, the bank borrowed money which it reloaned at higher rates rather than relying entirely on its own sources or deposits. So this is the credit deposit ratio and its importance. The next is very important, because this ratio is not talked about, but this ratio is very important in case of a bank. So burden is defined as the total non-interest expenses less total non-interest income. Okay, so whatever the excess of non-interest expenses comes over the non-interest income, it is called as burden. Okay, so the ratio of burden to total asset will be burden divided by total assets. Okay, so friends, we have already discussed the total assets and average asset in our earlier videos. If you are not familiar with these terms, you can watch the earlier videos in this series. Ratio of burden to interest income is equal to burden divided by interest income. So because this ratio can be calculated either on total assets or interest income. So the burden ratio measures how the net asset yield. Okay, net asset, it means net interest income divided by average asset will be burdened by the net expenses of the institution. How much of your net interest margin must you need to give up to run the business? Okay, it means, friends, there is very important concept. Okay, so banks, as we know, they deal in the credit. They accept the deposit and they give the loans to the customer. Okay, so the interest income and interest expense, these are the first two operating source of income and expenses for the bank. There are other categories of expenses also and income also, which we call it non-interest expenses and non-interest income, like commission or discount, commission, etc. and non-interest expenses like salary, wages, administrative expenses, etc. Okay, so the burden ratio measures how the net asset yield, it means the net interest income divided by average yield, will be burdened by the net expenses of the institution. It means how much of your net interest margin must you need to give up to run the business. Okay, so if the burden is there, it means you need to give your NIM to manage these expenses. It is one of the major focused outside of the interest margin. Okay, so it is the one major focused outside of the net interest margin that evaluate the coverage of the expenses to operate the franchises and subsidiaries, with the fees being generated by the banking franchises and its subsidiary. So basically it means what are the other sources of income for the bank, or because there are non-interest expenses also. So for that, if the entity or the bank is having burden, it means they need to forgo certain amount of NIM, that is net interest margin. So the burden is very important concept in the bank per se. So friend, with this I conclude my video. Hope you have liked this video. Thank you. Thanks for watching.